Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE volatility index, also known as the VIX, and that's ticker symbol VIX. And as I zoom in here, I'd like to highlight the past forecast lines so you can see how well technical analysis works. This was my forecast. It was a 2-week forecast where 2 weeks ago I said that the VIX will most likely drop, and it did hit my target price precisely to the penny right there, and then we started to rally, and you could see how earlier in the week the VIX followed that right back up to the 20-period moving average. And today, although we closed with a red candle, there's a shadow underneath that candle which tells us that the buyers came into the VIX and tried to rally it off the lows. Now let me just take a step back here before I go into my forecast for next week. This is a 20-year chart of the VIX where each candle represents 1 month, and you can see that we're hovering around the historic lows right around $9. And what that means is when the volatility index is low, it means that the investor population is fairly relaxed with their positions. So they're not buying with any new money. They're not selling any existing positions. They're just kind of sitting on the positions and waiting. However, that is also a fairly bearish signal, because when the VIX starts to rally and things start to heat up, that's a contrarian indicator for the S&P. So the Wall Street Journal came out today and mentioned that 7 out of 10 investors are changing their position to be more bearish, and they're fearful of a pullback. So obviously if they're fearful, they're not going to be putting any more money in what they believe is a market top. So what I'm going to do is I'm going to leave this line in place, because I think that the VIX is going to rally right back up, with my target for the VIX being right there over the next 4 to 5 trading days. And then we'll have to see whether or not it breaks through this resistance area right here. So I'm going to leave that in place, and you'll see how well this works next week when we review the markets at that time. Now again, this is a contrarian indicator to the S&P, so let me hop right to the S&P in what's known as the spiders. This is the S&P 500 ETF. And again, I've left my lines in place so you can see how well this works out. This is a 2-week forecast that I made. I said that's would rally. It did that. I drew this line as a resistance area, and I said most likely what would happen, I said this last week, I said we'll most likely rally to that resistance and pull back. And lo and behold, that's exactly what's happened right here, almost to the penny. We just kind of hovered around there intraday, but then closed back down below that resistance point. Now what does that mean for next week? Well, all I have to do really is extend this line as it pulls back to that 20-period moving average. The volatility index is looking bullish, which means that the S&P will most likely pull back. So I'll have to wait and see if that actually is the way the market works, and we'll leave that in place for next week. Now if we go to the Russell 2000, I'm going to jump to a more broad-based index. You can see that, again, my 2-week forecast on this was that we would pull back to the 20-period moving average and bounce. We did that. Although we did not get up to resistance. We did wind up at my target price right here, but we did not go all the way up to resistance. Now this is interesting because the Russell 2000 is a more broad-based index. What I'm going to do here is I'm just going to erase this so I'm not confusing anyone with too many lines. And this is a little bit more bullish than the S&P. Remember, this is a more broad-based index. I think that the Russell 2000 could rally towards the end of the year. Again, I think we're going to go right up to this target area right here. Why? Because we're still in the year-end rally potential, or what we call the Santa Claus rally, and that's where fund managers and hedge fund managers especially tend to bid up the positions they currently hold so that they're able to more or less max out on the bonus payout. And so right towards the end of the year, I think the Russell 2000 is going to rally. And then what happens is the money starts going into the small cap stocks, and that's known as the January effect. So I'm going to leave this in place right here. I'll talk more about that on Monday. We have an open house coming on Monday. I'll tell you where to get that link at the end of this video. But when we are looking at the year-end rally, we also want to position ourselves or get ready for the small cap rally and the January effect. So if I look at the Qs, that's QQQ, it's the ETF of the Nasdaq market, we moved exactly like I said we would. Again, this is a 2-week forecast that I put in. I said that we would rally, resistance is here, and then I said we would pull back. We did pull back a little bit, didn't pull back all the way to 20-period moving average, but we did pull back. Today, the Qs broke out of that resistance on higher volume. So, again, it looks like people are starting to position themselves a little bit early for the January effect. So next week, I think the Qs could actually rally higher. While the Russell 2000 could pull back, and the Dow could pull back, again, they're not always directly related here. They don't always go in sync. I think that the Qs could actually rally, set a new high, and I think that volume can continue higher. So if you're looking for opportunity, I would say that the Nasdaq market is the place to be shopping right now so that you don't subject yourself to the year-end sell-off. Right in the last week after the rally, we'll start to see the large cap stocks get sold off. Okay, now finally, let's look at the diamonds. This is the Dow Jones Industrial Average ETF. We followed my forecast exactly. I said that we would move up. I said resistance is right here. This is a bearish engulfing pattern that showed up on Thursday. And today, although we had higher volume, today we have a doji. That's usually a sign of indecision that is found at pivot points. So what I'm going to do here is erase this line because we already hit that as resistance. And I'm going to draw a forecast line for the Dow to move lower. All right. Now, again, this might seem a little confusing because we're talking about a year-end rally. We're talking about the January effect. The Dow is only 30 stocks. Well, the Russell 2000 is 2,000. The S&P 500 is 500. The Dow, I think, is looking more bearish than the Russell 2000. So I think it's going to be an interesting week next week as the markets may be moving in different directions, which in turn could create confusion amongst the investors. And that could also cause the volatility index to rise as some of these investors start to lighten up out of their positions and into cash. Now, this coming Monday at 8 p.m. Eastern Time, we're having our open house Q&A session where we open this up to the public each and every month. And for an hour, we go over your stock symbols, we go over the market, we answer questions. And this, again, is the open house Q&A. The link can be found on the front page of our website. Just click on that link. It'll bring you to the registration page. Fill in the information. It's pretty easy. It's free. You click on register and you've saved your seat. Again, that's Monday the 18th at 8 p.m. Eastern Time, where we have an action-packed hour, and I will be going through my rapid-fire stock analysis. It's a lot of fun. You'll get some good trade ideas, some good investment ideas, and I'm looking to have a special guest on Monday. I'm not going to announce his name just yet, but I'm looking to surprise you with a good old friend from the trading floor where we can talk about the gold markets and how that might be an opportunity for you as well. So have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.